What's up, everybody? Tom here with another video. Well, that was a lot of volatility over the last couple of days, or was it really? We've got to remember, big volatile days equal 2 to 3% down in the market. We're in the biggest earnings week that we've seen in quite some time. And I can tell you what, long-time viewers will be screaming at the screen right now, and they'll be saying, what is going on here, Tom? The long leg doji has come out to play on the Nasdaq. And what does this mean? Well, it means the market has actually no idea where it wants to go right now. Stay tuned for us to find out a little bit more about what we're thinking, though. See you soon. Okay, guys, the best place for us to start the recap of the market that closed 28th of July 2021 is always going to be the S&P 500 heat map. It gives us a visualization straight away that you can see. And you can come find this out at FinViz. I'm not sponsored by them, but what a cool heat map they have. Yesterday, what can we say? It was Nvidia, semiconductors, Google, AMD, Pfizer. They were the stocks that were going well. It was mostly just earnings plays. Apple came off a little bit. We've been talking about that buy the rumor, sell the fact. Remember, Apple, if it's in a consolidation pattern, about 2 to 3 weeks before earnings announcements, tends to have that little bit of a run up on it. And it's pretty consistent. You can go and back test it if you'd like. Let's talk about the markets, though. The fake market futures came in hot. It went down, it rallied, it looked great, and then of course I slept here in Australia. However, it went back down into the FOMC conference, and then it rallied a little bit and ended kind of, almost flattish on the S&P 500, Dow, Nasdaq, and IWM was really where the big kind of movements were, the smaller cap stocks. So do we take anything out of this? I think that it clearly just shows that the market doesn't really have a clear direction, and the FOMC certainly didn't drive that home. They didn't say anything new, and we'll talk about that in a second. They just basically said, we'll use all the tools, guys. All the tools. That's nothing new. We shouldn't expect any differently, though, in one of the most important earnings weeks. They would be foolish to interrupt the earnings and interrupt the normal cycle of the market. So let's talk about the sectors that were doing well yesterday. We had the biotech sector, we had energy, we had, of course, this semiconductor sector doing okay as well, which is great to see. And yeah, it's all off the back of, good announcements from the chip manufacturers, good announcements from Apple in general for their phone. These things are good. So the Federal Reserve basically just said it's committed to using its full range of tools to support the US economy in this challenging time, thereby promoting its maximum employment and price stability goals. Really, this is blah, 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 blah. You don't need to read too much into it. I don't think that the Fed will do much just now, but they will, of course, come out and talk about tapering in other statements. And that's really going to be the big story. And unfortunately, we've got to be on Fed watch here now for the next couple of years. This happened during the global financial crisis when we came out, when they talked about tapering. And it is something that if you're not watching it right now, unfortunately, we have to care. But remember, price action is going to show us the way, which we'll be taking a look at in a few minutes. Let's talk about fear and greed. So currently, confidence is going back up again on the Twitters. There's fear, there's greed, there's fear, there's greed. It's crazy how fast the retail community is switching their tones. And I think this is very important because I noticed that most of the hyper stocks, most of the retail kind of community stocks, were all moving up quite heavily yesterday, including AMD, which we'll take a look at. And there's some great data that you can drive into that's free, that you can see where the main calls are and the main interesting kind of levels are. And I'll talk about that because it's very important for us to understand. For any new viewers out there, August, September, this is the Nasdaq results. Remember, they tend to be lackluster to sideways. So don't expect like a blowout couple of months here in August, September for the Nasdaq. It tends to be sideways to down during this period of time. Now, we're still in earnings. We saw the Facebook result look like it was down quite a lot after that. And we've got Amazon, Pinterest, Twilio, and others, Gilead, etc., all coming out with announcements Thursday after the close. That's going to be another big day. And then we've got Exxon and Caterpillar, some of the kind of boomer stonks, I guess you would say, or boomer stocks on Friday before the open. Very important ones as well to be watching. We've demonstrated many occasions that September is one of the weakest months. We're going into August now. August post-election tends to be bad, but the stats here are a bit blurry. So, take with that what you want to and really just look more at the market and how it's trading. We go over here to the dollar index. Now, the dollar index was showing a lot of strength. Now it's showing a lot of weakness. We didn't really get enough good quality trades here. A lot of people saying, Tom, golden cross, which is, an important cross for sure. Why aren't you talking about it? And why aren't you talking about the double bottom, etc.? Look, we've mentioned the double bottom, but guys, please don't think that a double bottom is in play until it's in play. It has to close past 93.40 for this thing to be in play, and at least a body close above 93. You see this, yeah? It's all about the momentum. A double bottom pattern, you can predict it, and you can say it's happening, and you can maybe get in and down here, and you can possibly even take some positions here. But the actual position is not in play until it confirms. And when it confirms, then you can take the distance of course, the double bottom pattern and extrapolate it out. It's not possible to do that just yet. It's just not possible. We can't do it. We haven't seen the confirmation. Let's talk about some other things going on in the markets. We've got the US 10-year. And now, I think the US 10-year is looking disgusting. I mean, this looks very, very sick. You've got rejection candle. You've got a rejection backwards. You've got a rejection forwards, hammer. Then you've got another rejection backwards, another bearish looking kind of candle. And you can see there's a little bit of support here. What level is this? This is the 122, and it closed underneath that. Now, what the 10-year does is technically if the 10-year drops, that's usually good for the Nasdaq. But at this point, the 10-year is getting to a point that's a little bit scary. So what this is going to do is it's also going to drive down the financials. So things like JP Morgan, things like the smaller financials in IWM, which is about 23% of the index. All of those types of things are going to get hurt by a weak 10-year. So just watch the 10-year and know that financials are going to be the ones that if it does weaken and get through this support, it could go all the way back down to 1.13. And this actually might be seen as a little bit of a negative for the market. Even though it's positive for tech technically, it could be seen as a little bit of a short-term weakness here in the financial stability in the economy. You guys know my opinion is I'm optimistic here for quite a few years on the US economy overall. Now we move over to the TLT. The bonds continue to rise, guys. So while the stock market does whatever it does, the bonds continue to rise. I treat this as the smart money. We're above the daily 200. I've demonstrated on several occasions why that's important, why that's a key zone. This is used by Wall Street, and we are still targeting this 154 kind of 50 zone for the 20-year. Basically speaking, if bonds are going up, the stock market's going up, and everything looks all good, something is wrong. Usually bonds will not go up when the stock market's going up. This is a time where bonds outperform the S&P 500 over the next couple of months, and it could be stipulating some real volatility coming through here. Let's move over to gold for a second. Let's take a look at this chart, and you'll notice there was that great support through 1790, which we've been talking about. We've also talked about the downward trend line. So let's go to the 2-hour time frame here. So during the FOMC conference, basically it pushed it through, it closed above, you got that 1800 and kind of 10 level, which we talked about, 1811, 1810. It bounced, closed above that now, and I would expect if it does pull back, this is a great sign here. We're above the series of lower highs. So we have lower high, lower high, lower high. Everything looked weak, everything was declining. Now, all of a sudden, what do we have? A great level of support around the 1810, 1811. We've got resistance, 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 which should become support. This is what we call role reversal. And that's the point where you find buyer demand. So basically, we expect buyers to come in around this area. You can dial into the smaller timeframes, look for that buyer demand momentum, and then potentially take advantage of that in your trading system. So of course, do your own diligence, but it's a great sign here for gold traders. And the next level is really like an 1830. I mean, it could stop at 1823, but it seems to be, for me, I would think 1830 is the next logical conclusion here for gold. Let's move over to Tesla. Now, Tesla's still stuck within two areas. What can you do here? I would literally just look to the options market, and we'll discuss how you can do that in a few moments. So the options market is probably key for Tesla. Nothing is going on. It is boring. In fact, look at the 4-hour. Long leg doji. What's this mean? Indecision. The market has no idea what's going on with Tesla. It is one of the most boring trades, and I cover it here because you guys want it covered. But if I can't see anything, what can I do? It's just so boring. So we'll come back in on it. I'm sure one day it'll explode out of either the 690 high, which is where the daily closes are. Look at this on the daily, by the way, probably the better time frame. Or it'll close below the 620 and trigger some shorting. So either way, we'll check it out. And Tesla, for the moment, it's just not doing much. Now, one that is doing a lot, and we've talked about this a lot, has been AMD. Wowzers. Guys, congratulations on AMD. Look at that volume coming in over the last 2 days. Phenomenal stuff. Now, can AMD get through 100, you might say? Oh, it might get through 100 on Friday. Well, there are little signs sometimes that say it's unlikely to occur. Now, nothing's ever guaranteed. Of course, you can't just do that. That's not how trading works. Nothing is guaranteed. But there are signs and things that you can put in your favor. And a lot of those have got to do with taking advantage of retail traders' mindsets. So people yesterday would have been thinking, oh yeah, $100, $100, $100. And you might think, oh, I think it can get above $100, Tom. Well, unlikely it could do it yesterday and unlikely it can do it today. And I'll explain why. Not only is it a key psychological resistance, but at the same time, if we go over here and we look at the options, this is just taken from Finance Yahoo, and we scroll through July 30th expiries. We scroll down, and what you're going to notice is there's some key strikes here. And this is where I think people are a little bit small brain from the action of where they put options. You know, for me, I always like to think outside the box. Do I really want to be on the round number? The round number might make sense, but that's where everyone is. Think about where the retail trader goes. They buy 95 options, 90 options calls, $100 options calls. It makes sense to them. What you'll notice here is not many people are buying outside of that. So where do we have the key options expirations? Well, firstly, one of them, $100. The biggest options expirations are expiring at $100 during the Friday close. We also have some big ones at 98. We've got 14,000 there. Now, it's Wall Street's main endeavor to never pay you money. Remember, 70% of options expire worthless, which is why selling credit can be good if that's part of your strategy. But we have 95, 98, and 100. So when you think about it, it's technically Wall Street's best interest to get this thing under 95. Now, they may not be able to do that after earnings. That's completely logical for it to do so. But will it crack over 100? You would think certainly not. Not with that kind of money that's sitting there. They don't want to pay out on those. Even 98 might be a bit questionable with another 14,000 calls expiring here. So we've got a lot of pressure around these numbers. And this is why when you look at the calls and you start to really just think about it logically, why would they want to pay out these ones? They want all these to expire worthless. Always look for the biggest call for that week. And if you're looking at technical analysis and you just think, where would they not want to pay it out and you don't have earnings? If it's sitting on a round number, sitting near your technical, maybe that's a point where you might want to think about, scaling out or something like that. You'd be surprised how much that changes the game. And it's something we talk about in our courses, in our community, and we'll be talking about in our mentoring. But if that's something that interests you, you can find out more in the future when we do that type of stuff. And that's actually really my game. My game is options. I love options. Options. It's a beautiful thing. But you don't even need to know much about it just to bring it in with your technical analysis, with your fundamental analysis. Just understand that's actually unlikely to happen because nasty Wall Street don't want to pay these guys. And when you come to that light bulb moment, you're going to be like, oh yeah, I see what they're doing. These sneaky guys. I see what they're doing. IWM over here, we have the structural formation. Look, it's stuck in a channel. We're still bored. It's in the middle of the channel. With the 10-year going down like it is, I guess I would expect IWM to weaken throughout the session if that continues to happen. Once that IWM gets underneath that low, that will take a pressure on the Russell here. And remember, if the Russell was to come down, close underneath the 200 daily, to me, that would be a very bad sign for the market. In fact, I would think that's incredibly bearish. And at that point, I would be expecting that correction that we've been talking about for some time. It's just something you can't ignore because small companies often drive, Dow Transport, etc., often drive the market corrections. Let's talk about the QQQ now. So it hit the first trend line and we've kind of come off that a few times. We had that volatility that came through. And yesterday, we had a whole lot of nothing really. We gapped up. We went up, we went down, we went all around, we scared people, and then we created what is called a long leg doji. Now, you guys will know a long leg doji with a high and a low and a little kind of close and open at the same level. What's that telling us? The market itself has absolutely no idea where it wants to go. So we're looking for a Friday close. Now, if we get a Friday close above and it closes bullish, it's statistically more likely that we continue to go bullish. If it closes underneath, it's statistically more likely we go bearish. Now, I think the important part here is let's just think it goes bearish. And let's just say it goes underneath that. Now, is it going to go just into the 360? Or is it going to go and put pressure back on this level and possibly even the daily 50? I kind of feel like if this closes underneath this long leg doji to the bear side, it could be actually the real deal beginning here with a further kind of pullback in it. Because everyone's conditioned to buy the dip. If if we think about it, every single person's like, buy the dip, buy the dip, buy the dip. You got to buy the dip. Are you dumb? And I like it because you've been right. The price action is still up. We have to remain optimistic. There is nothing that has told us so far for months and months and months and months that we should be scared in the markets. And I'm not saying we should be scared towards a crash, but a correction could be in very real thing. And I've demonstrated on several occasions when you go back in time, the 50 exponential, which is where there is a massive section of puts. Like, I mean, at 320, there's puts, guys. Wowzers, there's puts. This would make perfect sense for Wall Street to do. Now, whether they do it during August, September, or whenever they try to do it, it makes perfect sense for them to do it. It's the exact level of where you see the market come back to after it is extended off bigger times. 50, 50, 50. If we consider we're in this period of 2010 to 11 right now to 12 and a standard slower kind of moving market that's been over the last couple of years, and especially since the pandemic, then when it falls back, it often falls back quite a lot more back to that 50. And it hasn't done so really since the 18 period, the 19 periods, and then of course the pandemic. So it's this whole run, it's never done it. So I'm certainly looking at that, just thinking about it, and I've just always got it in the back of my mind because I find history does repeat when you know what you're looking for during the right times. S&P 500, a little bit different, still indecision, still looking for a daily close either way. Daily above signals further bullish pressure. Maybe then we go get our trend line that we want, or daily below, back to the 20, and then possibly even back to the 50. So we'll be watching both of those sections, and remember to subscribe if you're interested in that. Let's move over to some other things right now. Let's go over to Bitcoin here just quickly. So Bitcoin continues to do really great things. Weekly 20 will be a big key here. Can the weekly 20 hold? So if it closes above the weekly 20 exponential moving average, that's a great bullish sign here for Bitcoin. If we go down to the daily, I stated this yesterday in the live stream. What I actually want to see here is not what you guys probably want to see here. I would like to see structural formation. So I would actually like to see the market do something like this and then bust high. And what that will do is it'll allow us to get through the real problem, which is probably going to be around 42.5. And it will do it with Wyckoff accumulation method. So we've had really so many of our standard kind of plays here with Wyckoff. It will mean it's a big channel. We can take the distance then and effectively extrapolate that out for our profit kind of potential up here around that 52. And I would love to see it just sit here for a little bit, consolidate. When does Bitcoin ever consolidate? Not that much, yeah. And if it did and then it broke through, I would be much, much happier with it. So we'll continue to watch this space. We'll see how it trades. But at this point, it's straight on resistance. Another one to watch is going to be Ethereum. This is effectively a giant double bottom on the daily. If it does close above 2.4, 2.4 leads to 2.6 to leads to 2.8. It's a pretty good pattern, and it's definitely been a lot less, I guess, hopeful and good when compared to Bitcoin. As always, if you enjoyed the stream, guys, please, and enjoyed the video, please remember to subscribe and hit the like buttons. We will be streaming 1 hour before the New York Open. That's ET, so 1 hour before the New York Open. And there's so much going on right now. It's going to be a ripper month in August and September, and I think it's going to be where the traders come out to play. And hopefully you don't get burnt up by Wall Street too much, no matter which way they end up choosing to go. Always be prepared and always have a plan. Bye for now.